we don't talk about building Alchemy to sell to insert publicly traded company here, right? We build Alchemy to remain Alchemy. That's it.
Hello everyone, welcome to Insurance Business TV and welcome to a leader profile special as we meet a man leading the charge for one of the US insurance industry's most rapidly growing firms. That company is Alchemy, and that man is founder and CEO Curtis Barton. Curtis, welcome to Insurance Business TV.
Thanks, Paul, for having me on. Really happy to be here.
So let's start from the beginning, Curtis, and talk a little bit about your journey. You started an agency with your father. So what lessons from those early days still shape how you lead today?
There's a lot. Honestly, it's kind of funny. As the company evolves, I keep having these things come back to me that my dad taught me early on, which is show up, be consistent, do the right things every day over and over in a repeatable format, and good things will happen. Treat people kindly. Take care of your employees, take care of your customers, the basics, right? Effort wins the day, and the way you treat people matters. And these are super important things that he instilled in me from day one, and they still stick today. There's still truisms in our business. It's what we, part of our cornerstone on how we approach the business. So definitely echoes of the past coming through. And my father, who I just spent the weekend with, and was telling him all about the business, and he was just mesmerized by it all. So it was pretty cool.
Yeah, wise words from Dad. You can show him this video later. You'll be happy. Right. Of course, Alchemy has grown now into a top 25 brokerage. So you've certainly taken those words a long way. But what were the key decisions that made that growth possible?
I think the real key decisions early on were, I knew I needed to do something with my agency. It was about $10 million in top line revenue, but just a little bit over that. And we were approaching 11, and I just needed to do something, right? And so, honestly, there was a pivot point where it was like, what do I do? Do I go and sell off to a publicly traded company? Do I sell off to another one of these aggregators at the time? Or do I try something completely different and blow up the entire thing and try to do something that I wanted to do, which is create an owner-operators model? And that was really the tipping point for me, was when I would meet with my competitors. At this point, they're my competitors, they weren't then, and talk about merging in with them. I just didn't feel like they were, in my opinion, they ran great businesses, they had tremendous results, but they weren't really insurance people from the strategic standpoint of what I was looking to join. And I didn't see how that would help my people grow or help me grow as an agency principal or an owner going forward, a future leader. And so I decided that I would stay independent for a while and try to do our own originally, which is Alchemy 1.0, we like to call it, which is we formed a cluster. And we brought 9 agencies over into that cluster, and we got everybody onto one system day one and put everyone into one instance of Epic and common, and made all of our workflows common and made sure that we had our data in one place to mine from. And we're talking 2018. So I'd say we were pioneers of sorts in the space for doing that, because not a lot of people were doing that and they weren't rewarded to do that.
Yeah, and of course, you spoke a little bit about that growth transition there, and obviously a lot of acquisitions have been made along the way. But tell us about your approach to acquisitions, because you can't just snap up firms. It's not as easy as that, is it? Well, how do you protect the culture while still driving scale?
Yeah, that's always the big one, right? I mean, that's one of the reasons why we went and got our own private equity money and merged everybody together, is because we thought that, at least the group that we were talking to originally thought that anybody else we would do a deal with would kill the culture that we had internally, which was, we wanted to be a high organic growth organization. We wanted to focus on the client first, and how do we better service our client? And I mean, these are basics, right? And then how do we free up our people to do meaningful work? Not just, we used to call it pushing paper, but now it's electronically. How do we free up their desks so they can be more proactive in the business and, be better stewards to our clientele? And through that, obviously, you have high retention levels that come along with better service, and they have a better job performance, so they're happier in their environment. And that's really, it's the basics, right? It's like, take care of the client, take care of your people, and profitability will follow. I think a lot of times in this space, people start with profitability and they try to back into the rest of it. And, we always said that we weren't going to be purely a spreadsheet, financial engineering play. That yes, we were always going to drive hard to create shareholder value, but we also wanted to maintain the basics and understand that there had to be a certain amount of reinvestment into the company in order for the company to be a company, not just a loose collaboration of, consortiums that operate on their own and then come together on a financial basis just for performance. And so we wanted more than that.
Yeah, and of course you spoke about your people there. Obviously, that's key. Integration can really make or break a brokerage platform. So what is your strategy for bringing teams together successfully?
Yeah, so our main thing is we look for core identifiers in any acquisition partnership we have. And so first of all, we always focus organic growth first. And I know that's a word that's been thrown around a lot lately over the last 3-4 years, and now it's become even more of a hot button. But when we originally started this, they didn't talk about organic growth, the investors. But in order, we always focus on organic growth. Why? Because that gives us the power to buy in organically. And so if you can be a hyper growth grower just from an organic standpoint, you can always then create capacity to grow through acquisition. Our acquisitions, we always wanted to be strategic in nature. And what do I mean by that? We wanted some identifiers that they would have to meet in order for them to be invited into our group. And that would be, hey, where are you? What's your age? How much gas do you have in your tank? What is your specialty? What are you doing that's different? Like, how are you growing your business? We looked at the last 3-4 years of growth. We measure it out on a CAGR basis. We try to look, are you a grower or are you stalled? If you're stalled, give me the reasons as to why you're stalled, right? And so since I come from the production side and I've done everything in insurance, I innately understand the insurance model from inside out. And so I can really identify factors quickly when I'm talking with people where they're stalled, and if they're stalled, can we help them or not? And so we look for highly niche orientated, middle market based. So we want the bulk of the revenue coming from middle market, SMB commercial business, because we feel that to be the strongest, stickiest point of contact. And then we want them to have thought more about, hey, how much reinvestment have they put in their company? Have they invested in systems? Have they invested in their people? Have they invested in their data? These are key performance indicators that don't jump off of a sim, but you have to find out during a conversation, because culturally speaking, we're a data-driven organization that's doing great things with technology, AI, and the rest of it. And we're a fully integrated, migrated company, always have been since day one. That's not the way that everybody else had to operate it traditionally. You were really rewarded originally to go fast and go strong. And so from our perspective, it was more, hey, what are you doing different? And we didn't go by geography either. We started originally in the West. We really thought about staying in the West and just really kind of mining what we'd call the Pac-12 strategy at the time. Pac-12 was a league here that doesn't exist anymore, and has gone away. But it was really kind of it was central around the Southwest West region, right, and Northwest, and that's kind of where we were going to start. But what we found out is there's great operators across the United States, and if you have good people, and you have good leadership, you can easily manage across the chain. And we always wanted people that could contribute back across what we call our value chain across Alchemy. And so I always call it pieces of the puzzle. Like, we look for pieces of the puzzle that fit. We don't want to just jam something in and try to make it fit because, we need to add EBITDA. I never wanted to be an EBITDA stacking company. I want to create Alchemy to be Alchemy forever, and I know that sounds like a cliche and a lot of people say it, but I could have sold to Gallagher or insert publicly traded company there. I could have partnered with anybody at the time when I had my agency, but I really wanted to do my own thing. And I wanted to create a different insurance industry platform that operated from an owner operator's mentality. And that's what we've created here at Alchemy. It's been fantastic.
Yeah. And of course, you're not just thinking about people when you integrate. Of course, you have Alchemy University and your university partnerships. So just talk to us about developing the next generation of leaders.
Yeah. So for where we're at, we wanted to do, I've been in this business for 28 years now, and literally everyone always talks about bringing youth into the business and the youth and the age problem, but no one ever does it on a consistent basis. People dive in and out. They have interns come in, they put a little effort in on the front side. When it doesn't work, they quickly throw it out the window because of profitability. And so for us, we want to make a strategic commitment at the university level. We want to attach to them while they're in college. We want to identify who can be a future leader in our organization. And we do this through multiple universities. Right now we've got University of Arizona. We're tied in there. We did a sponsorship or a namings deal on their basketball arena, which has been tremendous partnership for us across the Big 12 network, which is where a lot of our agencies are actually located. And then we got hooked into the Eller School of Business there, which is their business school. And through that business school, now we're doing guest speaking, guest lecturing. We're going in, we're running some programs internally for them. They're actually I have groups of people that are working on problems in our agency and identifying what those problems are and bringing solves back to us. And we're teaching them on the fly about what we're seeing and how we're solving it from our side compared to how they're solving. And then we're trying to get them to really look at insurance differently. I mean, I want it to be looked at. I want to take the old model, smash it up, and bring the new model to play, which is I don't want it to feel stuffy. I don't want it to feel antiquated. I don't want it to feel old. I don't want it to feel tired. I want it to feel new, fresh, invigorating. I want technology to be the forefront of what we do and how we deploy it the right way inside the business, not only from an operational perspective, but from a growth perspective. And then I want to bring tools that people could never even imagine to have in their heads as they're running a $4 or $5 million revenue shop, and put those on their plate. And those tools become opportunities or levers they can pull on for growth. And then we run support them from behind with all the key things like everybody else does, you know, the IT, the HR, accounting. We take that all off their plate. We get them really refocused back on, hey, take care of your people, take care of your clients, grow your business, look for opportunity. And, you know, where we sit from the way I carry myself, the way I dress, everything, I'm really trying to say, we're the direct opposite of what you would traditionally expect out of a top 25 insurance brokerage in a good way. We're embracing the future. We're not scared of it. We're actually open arms to everything that's going on. And, you know, I know this is a long-winded answer to that question, but it's a very deep question if you really think about it. But, you know, most of our competitors are really working at reintegrating their company at this point, and they're spending a lot of time and money to do it, where we're already integrated. So we can actually focus on, hey, how do we solve for technology? How do we bring technology in for service options? And how do we drive AI into our sales process? And how do we come up with cool ideas that can create opportunities, not only at the desk level, but at the sales level consistently? And so we're able to pull our effort from our business intelligence unit in that direction, as opposed to worrying about, hey, I've got to reintegrate 200 companies I've bought. I've got to get them all on one system. I've got to clean up their data. I got to do all these things. We do that along the way. Which actually has helped us too, because that actually naturally slows down your acquisitive nature, right? So it keeps you in a position where you're not going to do 40 deals in a year. You're going to do more like 20. 20 feels good, you know, and our targets are more EBITDA acquired based than they are really kind of, hey, I want a number on how many deals we do, because not all deals are equally weighted. So I think it's an important thing for people to understand. And so there's a lot of things that come out. We keep a scorecard. We have it digitized. It's in our process as we go through our meetings, and I run the M&A meetings. We're constantly scoring blindly with everybody on the call that acquisition potential, their partnership potential, and all those things weigh into the final decision.
Well, obviously, a big part of that success that you've nurtured there has been the ability to think outside the box. And you've also been extending that by recruiting talent from outside the insurance industry as well. Just tell me about the advantages that that's brought to your business.
Yeah. So again, like one of the things I said, you know, traditionally what you see in our space is everybody pulls on the same levers, right? It's like, hey, I'm going to start a new agency and I'm going to go hire 3 guys from insert publicly traded company here to come bring their rigor, their discipline of a, you know, massive company into a small company framework. And so what I always said is, look, I think we should look outside the industry for people that can turn the model upside down, and then, you know, look in different directions that we're blind to as the insurance agency or industry is sometimes, because we are antiquated. I mean, not Alchemy as a general, but the industry is antiquated in terms of technology and how we utilize technology, how we look at technology. And we're getting up to speed, and we're coming up slow. Insurance always is a laggard in that category, especially on the retail side, because not a lot of these companies reinvest in their company. So I brought in a guy that I've known for 30 years. He was run big business units inside publicly traded companies, and he's a real data-driven junkie. I knew that we needed infrastructure built to support the growth going forward. And I pulled him. He's from the wealth management side, and they did insurance as well. But I pulled him from the wealth management business, pulled him into the business to help me with that. I pulled another guy that had worked technically, traditionally for more SaaS-based companies, technology companies, pulled him in to be a strategy officer for us to understand, hey, where do we need to be thinking about from a technological perspective? How do we need to think about growing the company internally and externally? And what I got from that, which I thought I would get, was a clean look on the business. Hey, here's the holes that I see from where we traditionally come from and stand. And here's what we see that the industry's doing different that we can fix and make better and have a better result. And that's been tremendous for us. And so I think if you're going to talk about change, and you're really going to be one of those people that preaches change, you got to do something revolutionary like that. Take a step out, take a step off the ledge and go for something completely different. And it's paid out in spades, and in terms of how we've been able to put that team together in our C-suite and how it's been able to lead us forward as a company.
Well, summarize it for me then, if you don't mind. Let's pretend I am a firm and I've got offers coming in for me. Yours is one of them. What makes Alcheme's culture different in what is a very competitive brokerage market?
Yeah, I think there's a few things you got to really, there's a few things that are economic, right? That you've got to pay attention to if you're a seller in the space. And then there's the cultural side, right? So culture is culture. And I always tell people, like, economics are going to be economics, but economically speaking, some cool things about us, who we are, is we're under leverage for the space, which is great for us. So that means we don't carry as much debt on the business. We're a high organic grower, which means that we're actually active in the business. We're not passive growers, which means we don't sit back and wait for deals to hit us in the lap. So I'm willing to roll my sleeves up and do things that I'm asking you to do. I always tell people, I'll put my money where my mouth is first. I'll be the example for everybody. And so I think that's a big difference maker for us in terms of how we approach the business. And that's helped us out tremendously. I think thinking about the business when you look at it from that perspective, adding youth, putting technology in play that can help youth grow the business differently is a big deal. So the other thing I would say that is really, and I lost my train of thought for a second, I'll admit it, but I was thinking of so many things I could say, and I know we only got a little bit of time here, but we're on one common share of stock. We have no preferreds anywhere in our cap table, which really means to you as an investor coming in, and you're going to trade some of your equity for stock, or some of your capital that you sell the business in for stock, and you want to make sure that you're on the same share. Why? That means the investor has the same stock you have, and that's super important. It's called alignment. There's no one taking off the top, no one skimming the top, no one stripping value from investors downstroke. And then the third part is really liquidity. Can you provide liquidity? Is it an illiquid asset? Are you in a forever investment? Well, at Alchemy, you're not. We've already given liquidity out. We continue to want to give the liquidity every turn we could possibly give it at. We've created an internal marketplace to sell your shares on as well. So that's kind of like the technical side of it. Our debt also is super clean. We don't have any PIKs in our debt. A lot of our competitors have PIKs. PIKs devalue downstroke valuation for a shareholder. So if you look at a preferred instrument of any kind that gets slid in and do a debt stack, it gets paid first before anything else gets paid. And so a lot of times people don't quite grasp that. Hey, I may sell to a company that looks great on the outside. They may tell me my stock's worth X, but really when it comes down to it, when you have to go into an EV or enterprise value situation and sell the business, those preferred instruments get paid first. So we don't have any of that. So I could say we have the cleanest cap table, cleanest debt structure. So those are super important. I think we're the most aggressive in terms of how we deploy AI, not only in our sales function, but in our service function. So we're going to come with tools that are going to help you grow your business faster. We're going to come to you with tools that are going to help you keep your costs at bay so that you can hit your growth earnouts, which is huge. And then also too, we give people opportunity. We feel that at our size, we're very nimble to where we can actually give you opportunity to continue to grow with the business as the business continues to evolve. Whereas some companies that are fully mature, they're hitting a demarcation point where they're looking at, you're $1 billion in revenue. You got a really hard choice to make because there's not a lot of private equity guys that are coming in and saying, hey, I've got a check to cut into that because they can't get the upside return on it. It's hard to make, in 3 years, a $1 billion company turn into a $3 billion company, right? So there's a lot of upside advantage for us. And so I think, early on companies like ours can sell the upside, but then you've got to back it up and you've got to be able to deliver on what you're promising. And so we make sure that our demands and what we talk about will always meet the output that you're looking for. And so we're circled around the commonality and the shared values of, hey, how do we create shareholder value for everybody across the enterprise? And what does that mean, right? What's deeper than just shareholder value? Well, shareholder value means a lot of things to me. That means creating profitability, which means reinvestment of the company. That means reinvestment into your salary, your benefits. That means treating you giving you great things. Like we brought into our health program, we brought a thing called Well Hub, where people could have gym memberships, all this stuff paid for by the company. Keeping in the front of our frontal lobe that these are people that need to be treated appropriately so that we can get output from them that is desired. And we don't look at people as just bits and pieces. We never have. in the 5 years we've been in business, we always try to put ourselves in other people's shoes when there's a problem. What's going on? What's driving the behavior? Where's the problem breaking down? It's just not a bits and pieces thing where you go to a spreadsheet and you say, okay, right here, everybody down goes, kind of thing. And that some people look at that and say, hey, that's an emerging company thing. And you get to that point, you have to get to that point. And I fully understand that as a leader. But I will always look at people as people, because people drive the middle of this business. And if you take the people element out of the business, you don't have what is the most beautiful part about this business, right? Which is it's a retention business. It's annual renewable commission, right? You have a high retention level. You treat your clients great. It renews every year, and you have very little CapEx. It's a wonderful business from that perspective. But if you start to squeeze on your people and take that strategic cultural element out of it, and they don't buy into, hey, I want to wear the sweatshirt, I want to wear the hat, that type of stuff, as cheesy as that all sounds, means something. Our people love our stuff. They love to put our stuff on, but more importantly, they love the people they work for, and they love the teams that we're bringing together in the group. And that's where you really get the passion, is when you get the leaders talking to each other and you get the employees talking to each other. We work on the behalf of 1,500 employees across the United States, stretching from Boston all the way to Honolulu, Hawaii. And that's driven out of California. Now we will be moving the headquarters to Salt Lake City, Utah. And I'm here in Salt Lake right now. But that's how we have to think about it, is like, look, how do you drive culture across 1,500 people that far across the United States? Well, you get regional leaders, you set up regional leadership teams, but at the core, you set your mission statement, which is, really how do you want to drive the business forward? And we've been good about communicating that with everybody that comes on board and making sure that we're inviting the right people in.
Well, let's finish up with that theme then, which is, of course, driving the business forward. What would you say is the biggest opportunity for Alchemy over the next 5 years, and what's it going to take to capture it?
That's a great question. I think there's a couple of core tenets to that. I mean, one is whoever embraces AI to its fullest extent is going to be the winner. We've seen a lot of things go on, right? You saw the app pop up. You saw the publics trade down off of it. Well, that business isn't the business they trade on anyway. So it was probably just more of a profit-taking exercise, in my opinion. But when you really look at it, it's like, how do we use AI not to take jobs, not to do any of that, not to be the big, scary thing in the room, but how do we really use AI to power workflows, and how do we get AI to work in the middle of the night for us, so that when our employees come in the morning, 3/4 of their job is done. Now they're taking it the last quarter, right? And then they're able to be in what I call more of a proactive risk management role, which means that they're able to talk to the client, communicate with the client in a completely different manner. Than now we're talking personal. We've got your basics covered. Let's talk about what's going on with you, your business, what other opportunities lie within your sector. How can we help you? How can we be a trusted advisor to you? How can we be a trusted partner in your business, like we all used to be back in the day, right? Everything, things tend to want to be commoditized with digitization of the world. And some things can't be commoditized. And we want to make sure that we're taking care of people the correct way. And so I think harnessing that and being able to harness that, Brent, the other thing is just data, man. Having data structured, having your data in one spot where you can grab onto it and you can hit a button and see what your results are as a producer, as a service arm, as a leader, as a regional leader, being able to drive down off of that and saying, how are we doing compared to budget? How is a company performing? What are my KPIs that I'm looking at? And how am I personally performing against that? And what do I need? And who do I need to pull in to help me grow my business? And so the way we built our system has really been tethered to almost like an ChatGPT kind of open AI prompt-based system. So you can prompt anything in our system and it will take you there, from looking for employee handbooks to HR issues to your payroll to how do I cross-sell this account and who do I connect with to do it. And we've even got it to the point now where we'll even start drawing up emails and pulling news articles in and giving you ammunition to go and actually target new prospects as a salesperson. So I think AI is really, it's a seesaw effect, right? Like there's going to be a balance between it, right? So you are going to have some erosion in some of the business, right? Fine. But what you're going to see on the other side, you're going to be able to see yourself optimize much better as an organization. And I think the flows will be much better, which will make people's job experience much better, which will lead to more growth and more, in my opinion, a better work experience. And I think you'll see people start to graduate back towards what we saw early on, which is people didn't jump agency to agency left and right. People stay. And that's what we want. We want a core culture that stays, that knows our business, that feels our business, that's in tune with our business. And then we can drive the business forward from there. So, in terms of obstacles, everybody hits a size where the obstacle is the size, right? So that's going to always be a big thing that's out there. Once you hit that 800 million revenue to $1 billion revenue, you're really at that, what I'd call the tipping point in the business. And what you want to do is prepare yourself and have the rigor, discipline to be able to take multiple action at that point. Take yourself public, go for an MBO, management buyout, take it to a minority deal with a private equity person, do whatever you need to do to keep your brand continuing to drive forward. And what you've seen recently with a lot of the big agencies that have ended up selling to other bigger agencies, big fish eats bigger fish, or bigger fish eats big fish, is really kind of those companies. The investors stood back and said, do we really want to spend the time to reintegrate this business the whole way through to create the value we need to take it public, de-risk or de-lever the business to take it public? And I think the answer is it's easier to sell it to someone else. And, I could have done that early on. I could have done that, retired, and been done with this. Why would I put my blood, sweat, and tears into the business if I wasn't going to set it up to continue to build Alchemy to be best of breed, to continue to be a thought leader in the business, to continue to drive the business towards the future? And as we do that, have optionality along the way. Like, we're not dumb. We work on the behalf of a lot of investors, and we want to make sure that they get their returns, and we want to make sure that the shareholder value stays intact. And so optionality is important, but also knowing your core focus of Alchemy being Alchemy is always at the front of our minds. We don't talk about building Alchemy to sell to insert publicly traded company here, right? We build Alchemy to remain Alchemy. That's it.
Excellent. Obviously, it's going to be a very exciting time for Alchemy. Indeed, we look forward to watching the firm's growth in the years ahead. Curtis, huge thank you for your time. And remember, for more of the industry's leading lights, well, keep it right here at Insurance Business TV.